Hello, good evening to everyone. Today also live session revision, and today we have changed the chapters. Now today we will revise on this corporate finance section B. Let's wait for the other also, and if you are a student and you are applying for exam, and this is very much helpful for you, and I am going to revise every chapter which carry around 5 to 10% every chapter, and I will revise within the half an hours. And if you are appearing for exam this May and June, then this video will be the very much effective for you. And because I cover the entire chapter within the few minutes, less than 1 hour I cover, and I also try to explain the concepts, which concept will help you to build your concepts and to solve the questions. And if you understand the concept, and you can solve any type of questions. Main thing is, first we need to understand the concept to solve the questions, and we don't know what kinds of questions the institute will ask. That's why we have to understand the concept. Mainly we have to focus on the concept, okay? And if we know the concept, and definitely we will solve all the questions. And another thing, only concept is not sufficient and to solve all the questions, and we have to do the practice as much as possible. We have to do the practice. Without practice we cannot solve. Only concept will not work. If we do only practice without concept, and we cannot solve if there is the alter questions the institute asks, that in that case we have to be ready for the all types of the questions. And that's why we have to be very much open, and we need to understand all the concepts, and also practice. If we have the concept as well as practice, and then we can easily handle the any type of questions. And we just do the practice the questions, and on the basis of other type of same question, if institute asks, then we will able to solve the questions, okay? And now we have this working capital management chapter today, and this working capital management chapter is very much important for the exam purpose as well. And I try to solve when I all the questions, and also try to explain all the concepts, okay? Now we have this question, only question number 28 are there, and let's start to solve all the questions one by one. We don't have that much time, and we have to solve all the questions. Around 35 to 40 units are there to be revised. Question number 1. This is question number 1. The optimal level of inventory is affected by all of the following except the. All the given option will affect. Hello, how are you? Listen. And blacksmith. Where are you from, blacksmith? Are you a student? And if you are a student, and you can solve the question, I always show here questions, and if you have the better option, you can suggest, and we will do mutually. And if you know the answer, you can type in the chat box, and we will discuss also. And if there is a concept to be discussed, then we will discuss definitely. I will pause the session and I will discuss, and concept will be clear, right? Now the question says that optimum level of inventory is affected by all of the following except. Optimum level of inventory means what? Optimum level of inventory means that there should not be the stock out situations, right? And there should not be excessive stock. Uses the rate of inventory per time period. Rate will be considered for the optimum level of inventory, and cost of placing an order for merchandise, cost per order, okay, and cost of unit of inventory. Cost of unit of inventory is not considered. Current level of inventory. See, cost of unit of inventory is not relevant for the optimum level of inventory because this is cost related, not a usage basis, right? This option C is the correct answer because this is not a consideration for the optimum level of inventory, right? Now in question number 2, this question number 2, this is lengthy, and question number 2, let's read the question number 2. Todd manufacturing company needs 100 million loan for 1 year. Todd's bank has presented two alternative options as follow. Option 1, 1 million loan with the stated interest rate of 10.25%, no compensating balance required. I will tell you this, what is the compensating balance. Compensating balance means the balance the customer need to maintain, minimum balance need to maintain, okay. If the customer don't maintain that minimum level of balance, then the customer need to pay fine, there will be the fine. Okay, then question number 2. Let's solve these questions. This question is quite tricky and we have to apply the logics here, and the company needs 100 million pound, right? 100 million pound required, and there are two options available. One option, the company need to maintain the compensating balance, and another option, the company do not require to maintain the compensating balance. It means minimum balance need to maintain, or other option don't require to maintain the minimum balance. There are two options. Okay, where the minimum balance is required to maintain, there is a rate of interest is 10%. Where the minimum balance is not required to maintain, there will be the 10.25% the interest rate, and we have to calculate the which one will be the beneficial, right? No, question is asking at what level of compensating balance the that 10% interest rate and 10.25% interest rate both will be the equal. And that case, that option number, that second is correct answer. Okay, and question number 3. Question number 3 is easy. This is theoretical questions, and the average collection period of a firm measures the number of days. What? This is debtors related account receivable. Average collection period of a firm measures the number of days for the typical check clearance through the banking system. This is not correct. Before the typical account become the delinquent. This is not correct answer. Beyond the end of credit period, before typical customer payment is received. Options D, after typical credit sale is made until the firm receive the payment. This one is the option D is the correct option. Okay, now question number 4. Considering the following factor of a company as it is reviewing its trade credit policy. Company is reviewing the trade credit policy. Okay, and there is given that operating at full capacity, low cost borrowing, opportunity for repeat sale, low gross margin per unit. Okay, which of the above factors would indicate that the company should liberalize its credit policy? Option A, one and two only. Option B, second and third only. Option C, third and fourth only. Option D, first, second and third only. Which one is the correct answer? Company is considering for the credit policy, right? Credit policy, which one this option will affect the credit policy? We have to understand. Okay, that credit policy means while we make the sales, then customer may not able to pay the in cash on sale. In that case, we will give the facility of the credit to the customer, right? And which factors will affect this credit drafting, streamlining this credit policy, and operating at full capacity. That is not this is not a relation to the credit policy. Operating at full capacity, it means that just affect the availability of the idle time in case of excess order demand received at that time there may be the effect, but for setting up the credit policy there is no relation with this operating at full capacity. And low cost borrowing, definitely low cost borrowing is affecting to the credit policy, because if we giving a credit policy credit more days credit to the customer, and if we are taking loan from the bank or financial institution, and there will be the higher cost to us, interest cost, right, whether processing cost, commission cost, maybe the extra cost as well. In this case this will be affect the credit policy setting. And opportunity cost, repeated sale, definitely why we give the credit to the customer, because customer again will repeat, and repeated customer may come. That's why we are giving the better opportunity to the customer. That will another benefits to a customer, to attract the customer. And low gross margin per unit, this is not relevant for the credit policing setting. Okay, that is why option B is for second and third only. This is the correct answer. Okay, now question number 5. Richardson supply has $100 invoice payable with payment terms 2/10 net 60. Means how can we read? This means 2% discount if you pay within the 10 days of the purchase, right? Otherwise you have to pay within the 60 days. We have to read it like this. Richardson's can either take the discount or place the fund in money market account paying 6% interest, right? Using the 360 days a year, Richardson's cost not taking cash discount. How much? Not taking cash discount. First we need to calculate what is the Richardson cash discount rate. Okay, if we calculate cash discount rate, 2% discount. 2% discount means 0.2% discount means 100 given 2%, 2. Okay, 2 divided by 0.92 multiplied by 360 divided by 50. 50 how much? How it means 60 minus 10 will be 50. Means how many days will be beneficial? It means 10% discount will available within the 10 days. Means 10 days already available even cash sale. And how many days available on credit? 50 days. Means 60 minus 50. 60 minus 10 will come to 50. And 50 days benefit in term of percentage will come to 14.69. 14.69 means 14.7. 14.7% benefit of if we take a discount offer. Okay, but for taking this discount we have to borrow money from the bank at 6% interest rate, and 6% interest rate interest. No, this is not rate, this is 6% interest. And if 6% interest is to be paid, then how much benefit remain? 14.7 minus 6% will come to the 8.7%. Now Dexter Products receives 25,000 worth of merchandise from its major supplier on 15 and 30 of each month. It means 2 times receive. Okay, in a month, 2 times receive in a month. The goods are sold in term of 1% discount if pay within the 15 days, otherwise pay entire amount in 45 days. And the Dexter has been paying on the net due date and foregoing the discount. It means the Dexter is not opting that discount, cash discount offer, okay, but paying within the due date means 45 days, okay. A local bank offered Dexter a loan of interest rate 10%. What will be the net annual saving to Dexter if the borrow from the bank and utilize the fund take advantage? Okay. Total net worth how much? 25. Discount how much? 1%. 25. This is one time. We receive how many times in a month? 2 times. Into 2. How much? 50,000. 50,000. 1% discount how much? 500. Okay. 1% discount will be 500 in a month. Okay. And if this Dexter limited company take loan from bank at 10% per annum for 50,000, how much? No, 50,000, not 50,000. Don't be confused, because if we receive the discount 1%, how much will need to be paid? Discount 1%, 50,000 minus discount 500, 49,500 only we need to pay, right? And how much money we have to borrow? Only 49,500 we need to borrow money from the bank, and we have to pay interest on the 49,500 only, not 50,000. There may be the confusion, because we already received the discount 1%, that 500 out of 50,000, and 50,000 minus 500 come to the 49,500. Okay. And what will the interest rate? Interest rate is 10%. Okay. This is for per annum, and for 30 days how much? For 30 days, multiply by 30 divided by 360 equal to 412.5 minus 500. This is for 1 month, and 12 month how much? This is 1050 is the correct answer. Now question number 7. Okay. Question number 7. Caluson INC grant credit terms 1% discount if pay within the 15 days, otherwise need to be paid within the 30 days, and project the gross sales of next year will be the 2 million. The credit manager estimate that the 40% of the customer pay on discount date, and 40% pay on net due date, and 20% pay after the due date. 15% will pay after the due date. Okay. Assuming uniform sales and 360 days a year, what is the projected days sale outstanding? This is very simple questions. For this one we have to memorize, and we have the process, then only we can solve, else we cannot solve this one within the 1 minute, 2 minutes. Simple. What we will do? 15% discount. 15% discount. 15 day how many? 15 day. 15 day. 15 day multiply by how much? 40% is come 6 days. Okay. And 30 day 40% is come 12 days, and 30 plus 15 how much? How many days is come? 45 days. 13 plus 50 15, it come to the 45 days. Multiply by how much? 20%, is equal to 9. 27 days is the correct answer. Now question number 8. Okay, question number 8. A company plan to tighten its credit policy. Company is striking its credit policy. The new policy will decrease the average number of days in collection from 75 days to 50 days. No, the credit policy, new credit policy will be the only 50 days and will reduce the ratio of credit sales total turnover from 70% to 60%. Turnover also will reduce. Okay, the company estimate that projected sales will be 5% less if proposed credit policy is implemented. If projected sales of the coming years will be 50 million. Okay, 50 million minus 5%, how much? 47. No, this is 50 million, 47.75 million. 50 million minus 5%. Minus 5% is come to 47.5 million will come to the, this is the sales. Okay, and now how much credit sales? Is coming to 333300. Question number 9. What is the meaning of aging? Aging means receivable outstanding period. Okay, receivable, suppose I make sales on credit last month, 1 month ago, and still there is a pending. Okay, if there is a pending receivable from the customer, and that 1 month period is called the age. Okay, time period outstanding, yes, that measuring is the aging. Okay, the amount receivable that have been outstanding for the given length of time, and average length of time that receivable have been outstanding. Ability to perform to meet short-term obligation, this is not correct. Percentage of sales that had been collected after a given time period. Now collected is not a aging, because if there is already collected, there will not be debtors, there will not be receivable. How can be the aging, right? That is why this is, both option is not correct. Third and fourth are not correct, and option B, average length of time that receivable has been outstanding, this is the correct answer. Okay, now in question number 10, assume that each day of a company writes and receives check of 10,000 if it takes 2 days for check clearance and be deducted from the company's account and 1 day for deposit to clear. Do you know how to calculate this one? This is, it means when we issue the check, it will take 2 days to clear. Okay, it means 2 days fund will stay in our bank. After 2 days only that amount will be deducted. It means there will be the 10 into 2 means 20,000, and 1 day will take time to clear. It means when we deposit, then 1 day will take to clear, and it means 10,000 is different. Okay, Now question number 11. As a result of economic order quantity formula indicates economic order quantity formula indicates what? EOQ. You can see there, in already I have mentioned this thumbnail also, EOQ formula. Okay, this is EOQ, economic order quantity. Each individual order during the year. Each individual ordered during the year. This is not correct. Annual usage of material during the year. Annual usage of material during the year. This is not a correct formula for EOQ. And safety of stock plus estimated inventory for the year. Annual quantity of inventory to be carried. Safety of stock plus inventory for the year. Annual usage of material during the year. This question number A is correct. Is quantity of each individual order during the year. Of whom? Question number 12. Question number 12. Any participants who can solve this question? I would love to those who are participating for solve the questions. Of whom is given payment terms 3% discount if pay within 10 days, and if not paid, entire amount need to pay within 90 days. The forwards the discount paying on the due date. Using the 360 days a year, ignoring the effect of compounding, that is effect of compounding, ignore, we have to ignore. And what is the effective annual interest rate? That we just need to consider, suppose 1, okay, because no figure is given, we have to consider 1, okay. Suppose 1, amount is 1, if I consider, then 3% discount, how much? 3% discount. 3% discount means 0.03, okay. And 0.03 means, and if I consider 1 means 1 minus 0.03, how much? 0.97. 0.03 divided by 0.097 equals to 0.03 multiply by 360 days divided by 90 divided minus 10 means 80. It's come to 13.91 percentage. 13.91 percentage is given 9. This one, option A, is the correct answer. Okay. Now in question number 13. Okay. Now question number 13. Foster INC is considering implementing a logbook collection system at the cost of 80,000 per year. logbox system considering to implement in the organization, and its cost will be the 80,000 per year. Annual sales will be the 90 million, and the logbox system will reduce the collection time by 3 days. Only 3 days will reduce collection time. If the foster can invest fund at 8%, it means the fund can be invested at 8%. Should it use the logbox system? If there is a benefit, then we will use. If not benefit, we will not use. We will reject that logbox system. Simple. Okay. And how we will decide for this one? First of all, 3 days only benefit. Okay, 3 days will be the reduction days. 90 million sales, 90 million sales, 90 million sales. Okay, and how much sales for 3 days? Multiply by 3 divided by 360. 7,50,000 sales. Okay, for 3 days sales 7,50,000. 7,50,000, and if we invest in market, and it will come to the 8% interest rate per annum. Okay, now 7,50,000 multiplied by 8%, how much? It's come to 60,000. But what is the logbook cost? It is 80,000 minus 80,000, and it's come to negative 20,000. This is loss, and we are rejecting the this proposal. Okay, because accepting that this proposal is negative figure, negative benefit is there, that is why we have to reject this proposal, and there will be the negative. No, we producing loss 20,000 per year. This is correct answer. Okay, now question number 14. Question number 14. Which one of the following statement concerning cash discount is correct? Cash discount means when we offer to customer to pay cash as soon as possible, we have to give the discount, right? There are given the options which one is the correct for discounting cash. The cost of not taking cash discount is generally higher than the cost of bank loan. Okay, one of the statement concerning means which is concern for cash discount. Why customer don't take the cash discount? Simple. Okay, why customer don't take the cash discount? If the customer taking the cash discount that is not beneficial to him, then he will not take, right? When that benefit will not be beneficial to the customer, we have to consider. Suppose customer normally get the 60 days credit period, but we are asking him to pay within the 10 days, and I am going to give the discount 1%. Okay, I am giving the 1% discount. That what amount he will get the benefit? 1%, right? But 60 days 50 days prior to maturity he has to pay, right? That is 50 days time value of money. He has to borrow some money from the bank, and that amount he has to pay interest for 50 days. If that interest is more than that cash discount amount, in this case the customer will not accept that cash discount offer. He has to reject. In this case, option 1 is correct, where the cost of not taking cash discount is generally higher than the cost of bank loan. In this case, the customer will not accept this offer, right? Simple. If we are giving the discount, that discount is not beneficial to the customer. In this case, he will reject. Option A is correct. No need to read other option. Okay. Now, question number 15. A company obtain a short-term bank loan of 50,000 at annual interest rate of 6%. Okay, bank loan 2,50,000, interest rate 6%, and a condition of the loan that company required to maintain the compensating balance. Already we discussed what is the compensating balance. Compensating balance means simple, he has to maintain the minimum balance, that's all. Okay, compensating balance 50,000 in its checking account, simple account. Okay, the company checking account on interest at annual rate 2%. He has to maintain minimum balance 50,000. On that 50,000 he will earn only 2%, but how much percentage interest he has to pay for that loan? He has to pay 6%, but when he maintain balance 50,000 minimum balance, he will earn interest only 2% of that amount. Already 4% loss, right? Now ordinarily the company maintain balance of 25,000 in checking account. Here is the another issue. If company even don't take a loan, he normally maintain the 25,000 balance that checking account. But when he take a loan, he has to maintain 50,000. But how much difference? There is 25,000 already he is maintaining the minimum balance. But when he take the bank loan, he has to maintain additional 25,000, right? Additional 25,000 to maintain. How much cost will be there? Okay, we have to calculate accordingly. We have to decide. 25,000 checking account transaction purpose. What is the effective interest rate of annual loan? Okay, now the concerning how much effectively we can use that fund 2,50,000, and additional how much fund we need to maintain for compensating balance 25,000. It's come to 2,25,000 only effectively fund we can use. Okay, and how much interest we have to pay? 2 lakh entire amount, 2,50,000, 6% interest will be there, 15,000 divided by 2,25,000. It's come to the interest rate 6.666. 6.666. This one is the correct answer. Okay, now question number 16. The question number 16, a major supplier has offered Alpha Corporation a year-end special purpose whereby Alpha could purchase the 180,000 cases of a sport drink at 10 per case. Alpha normally orders 30,000 cases per month at 12 per case. Alpha cost of capital is 9%. Calculate the overall opportunity cost of offer and cost of carrying the increased inventory would be. Here is normally Alpha Corporation used to purchase its inventory 30,000 per month. That will per case will be the $12. Okay, normally. And when the another special offer, he received 180,000 cases. That is per cases will be the 10. It means 180 minus 180 multiplied by 10 equal to 18 lakh. He has to order means one. Okay, but normally he used to order only 30,000 per order, but now he has to order 1,80,000. How much difference? See, 1,80,000 minus multiply by 10. How much cost will be there? 18 lakh. Normally, how much he used to order? 30,000. 30,000 multiplied by 12. How much? 3,60,000. Okay. What will be the average inventory? Average inventory will be 18 lakh plus 0 opening 0 equal 18 lakh divided by 2, 9 lakh will be the average inventory when we accept this proposal. There will be the 9 lakh. And what will be the average inventory for accepting the in normal case? Normal case will be 3,60,000 divided by 2, 1,80,000 minus 9 lakh. 9 lakh is come to 9 lakh minus 1,80,000 minus 180,000 is come to 7,20,000. 7,20,000. What is the cost of interest? Interest 9% and 9%, and this is for annual, and divided by 2 because we have 2 orders in a year. 32,400 is come. 32,400 is the correct answer. Okay. Now in question number 17, this is very easy. EOQ, economic order quantity, calls EOQ. Okay, economic order quantity is EOQ formula. Okay, which one of the following statement concerning the economic order quantity is correct? There is given option. EOQ model assume that order delivery times consistent. Yeah, this is correct. EOQ order is best way to check avoid a stock out. This is not correct. EOQ model assume that constantly increasing usage over the year. This is not correct. The EOQ result in minimum order cost and minimum carrying cost. That is also not correct. Option A is correct. Okay. Now question number 18. Question number 18 is quite lengthy, but this is related to capital budgeting, I think. January, February, March, April, May, June. Purchase and sales given. Requirement is what? A cash payment equal to 40% of purchase made, means for April we have to calculate for the month of April. What is the question is saying? What the question is saying is the April month purchase, how much purchase is 140,000 and sales is 300,000. Okay, and payment equal to 40% of purchase made time, means purchase how much? 140,000. 40% how much? 56,000. This we have to pay. Okay, negative we have to pay, and 30% is paid each of the next 2 months, means 2 months before purchase we have to make 30%, right? 2 months before, which one? February and March. February how much we purchase? 160,000. How much? 30%. We have to make payment this one, and February also we have to make 160,000. This is also 30% we have to pay this month. Okay, and purchase for the previous November and December where this 150,000 per month is not relevant to us. Payroll is 10% of the sales in the month is occur. Okay, payroll is 10% of the sales. Okay, sales, how much sales is there? 300,000 is the sales, and payroll is 10% of 300,000 10% sales. This is payroll. 20,000 is payroll. Okay, payroll means salary. Outstanding expenses are 20% of the following month sales. Following month sales means what? my month sales how much? 260,000. 260,000, 20% is 20% is the operating expenses. Okay, 52,000 is come the 52,000, and interest payment were 20,000 quarterly in January and April we have to pay interest 20,000. Okay, 2,54,000 is correct answer. Okay, 2,54,000 come. Okay, we have to pay in the April month. This is correct answer. During the inflationary period, for last in first out inventory occur will given generally have. Yesterday also we discussed for this question, so because yesterday we did for that ratio analysis. Okay, the same this concept was there. When there is the inflationary period, it means latest product will be costly as compared to past purchase stock. Suppose I have one stock purchased in 2020, 5 years back. That at that time the cost was very cheap. Now inflation come and the rate will has been increased. Okay, but I'm using LIFO, last in first out. Last in first out means latest purchase will soon sell. Means today I purchase, today I sell. This concept will deal like this. If I sell today, what will be happen? If I purchase today and if I sell today, means purchase cost high. Purchase cost high, that is cost of goods sold. Cost of goods sold will be high and inventory will be low. Why? Because my inventory will be the old one only, new one will not be there, right? Because last in first out, latest purchase will first out. That's why option C is correct. Higher cost of goods sold and no, this is not correct. I have higher cost of goods sold and lower of the inventory. Higher cost of goods sold and lower of the inventory value, because inventory value will be the historical cost and old one inventory we have as per LIFO, and old inventory will be the low cost, and if we purchase the latest one, that will be high cost, inventory will be low. Okay, now in question number, this is question number 20. Okay, question number 20. Which one of the following statement is most correct? If a seller extends credit to purchaser for the period of time longer than the purchaser operating cycle, means the seller is giving the too much benefit to the purchaser, and it means will have lower level of account receivable than those equipment whose credit period is shorter than the purchaser operating cycle. This is not a correct answer. Option B is an effect of financing more than just purchase of inventory need. It means if we are giving the time period to the purchaser more than his operating cycle, it means we are funding to him for the debtors as well, or the beyond to the inventory, right? This option is correct. Now question number 21. Okay, now question number 20. Example of carrying cost is what? Carrying cost. Carrying cost is the spoilage. Carrying cost is spoilage. Spoilage or handling cost. Handling cost separate, carrying cost separate. Spoilage is the carrying cost. Okay. Now question number 22. Question number 20. The best example of marketable security with minimum risks would be, best way of, this is the commercial paper. Commercial paper is most liquid and easily we can trade in market any time. Gold is not a marketable security. Municipal bond is not for good for short term. Common stock for AAA rated, this is not good for short term. Now question number, only option C is correct answer. Question number 23. A company has daily cash receipt 150,000. The treasurer of the company has investigated the lockbox system whereby the bank that offer his service will reduce the company's collection time by 4 days at monthly fee of 2,500. If the market rates have 4% during the year, the additional annual income losses from the using the box system will be what? Daily cash receive how much? 1,50,000. 1,50,000. Okay. How many days reduce? 4 days. 1,50,000 multiplied by 4 days. 6 lakh is coming. Okay, 6 lakh. What is the interest rate? 4%. 24,000 is coming. And monthly, how much total cost per annum for a 25 per annum? Monthly into 12 equal to 30,000 minus 24,000 is negative 6,000. Now question number 24. If a retailer's terms of trade are 3/10 net 45, it means 3% discount if paid within the 10 days and if not paid within the 10 days and have to pay within the 45 days entire amount. With a particular supplier, what is the cost on the annual basis of not taking the discount? We have to consider one. Already also same type of question we have done. Okay, 1 means 0.03 divided by 0.97 is come to and now multiply by 360 divided by 35 is come to 31.81 percentage. Okay, now question number 25. Which one of the following statement about the trade credit is subject to risks by default credit? This option 1 is correct. Now question number 26. A company holding cash of a speculative motive cash is for what? Provide a safety margin? No. Payroll payment? Pay bills? No. Protect against the uncollectible receivable? No. Take advantage of the future investment opportunity? This is correct answer. Now question number 27. Which one of the following is the item is not directly reflected in the basic economic quantitative model? Interest and investment correct, because this is the one part of the carrying cost, and of quantity discount lost in inventory purchase, this is also part of the carrying cost. Inventory obsolescence, this is not a part of the carrying cost. Now question number 28. This is the last question. Okay, The level of safety stock and inventory management depend on all of the following except level of safety stock and inventory. So inventory safety stock in inventory level of the customer dissatisfaction is correct. Dissatisfaction means if the customer dissatisfaction cost to the border stock. Cost to reorder stock. Cost of running out inventory. Level of uncertainty of sales forecast. These all are included. Now we last question. Right? Okay. Now finish. Submit. Okay. The result will come. 4 questions are mistake there still. Okay, thank you so much for watching. Now live session will end.